Okay, gentlemen and ladies, we are going to call the meeting to order of the Finance Committee meeting of Tuesday, October the 10th. We're going to do an electronic roll call, please. It's open. The only absent member is Mayor Schumer, and because of the quirk of the holiday schedule, he has a municipal committee meeting in his council chamber today, so he did send regrets. It should be noted he's away on municipal business. Is there any declarations of interest? Being none, adoption of the minutes. Moved by Councillor Lee, second by Councillor Wu, that the Finance Committee meetings of September 12th, 2023 be approved. All those in favor? Opposed? That item is carried. We have, there's no statutory meetings, and we have two presentations that are kind of related. So I'll turn it over to the Commissioner in regards to investment, and a potential partnership with One Investment is the second presentation. So, Commissioner?
Good morning, committee. I wanted to introduce two people that are presenting and a second two people that are presenting. So with us today is Dwayne Ramkissoon, who is our Manager of Investment Portfolio. So he'll come to the podium to present, and he is also, you'll hear from him next month because he also oversees our debt. And then with him is Chanel Shai. She's the Director overseeing investment portfolio, but also utility finance and financial information systems. So she is here as well to support Dwayne. And Dwayne is going to present on the Region of Durham recommendations, where we're at, what we're looking for committee to do for us. And then after that, we have Jennifer Hess and Kevin Taylor attending from the One JIB. And the reason why they're attending is, as you would have read in the report, the only legal one JIB that we can enter into, if that's the pathway that is supported, is through One. So they're going to present on the custom things that they've been working on with respect to large investors. So I'll turn it over to Dwayne to start, and we'll be happy to take questions. And this is a great opportunity. I was mentioning to the chair that for once I'm bringing you something that will make money. So this is a great opportunity for us to make some additional funds. Thank you. And over to you, Dwayne.
Thanks, Nancy. So good morning, members of committee. As Nancy mentioned, I'm Dwayne Ramkissoon, Manager of Investment Portfolio here at the region. And my presentation today will include a review of the Prudent Investor Standard for investing, including some key characteristics which are relevant when considering adoption for the region's investment portfolio. So today's agenda will cover the legislative requirements, merits and limitations of the standard, and also some collaboration opportunities and next steps if applied to the region's investment portfolio. So the legal list approach to investing has existed for many years, but in 2018, the province added Prudent Investor as an alternative for municipalities. Under the legal list, all municipalities have access to investing regardless of their size, and and the regulation defines what municipalities can and cannot invest in, and options are generally very conservative to reflect low-risk investments. Under Prudent Investor, there are financial criteria that have to be met. This includes either municipalities have 100 million in investments or 50 million in net financial assets to qualify independently, or one or more municipalities have a combined total of $100 million to invest. Qualifying municipalities will need to create or join what's called an investment board or joint investment board, which is a collection of professionals and municipal experts. And investments can include anything that is considered prudent for the portfolio. So for example, direct ownership in global equities and bonds. However, Council will need to delegate its investment powers to an independent investment board. So the graphic on this slide emphasizes that the legalist approach represents a small subset of the possibilities that can be achieved through Prudent Investor. This reflects significantly more opportunity to diversify amongst different asset classes, sectors, and markets. This also means additional flexibility to respond to market events, which not only provide greater potential for improved returns, but also an enhanced ability to manage portfolio risk, which is equally important. As an entity that independently satisfies the financial criteria for adoption, there are 4 options available for the region to pursue prudent investor. These options are to maintain the status quo and continue investing using the legal list, establish an independent Durham Investment Board, or Durham Joint Investment Board with local Durham municipalities, and lastly, join an existing external joint investment board, excuse me, such as the One Joint Investment Board. And I'll discuss aspects of these options throughout my presentation. So the distinction between short and long-term funds is a key concept for the Prudent Investor Standard. Long-term funds, also known as money not required immediately, refer to cash and investments managed by the investment board on behalf of the municipality, and short-term funds, or money required immediately, would continue to be managed internally by Durham Region staff under the existing legal list rules. Municipalities have the flexibility to determine what definition of money not required immediately should apply to their portfolio. However, to identify short and long-term funds, a comprehensive cash flow and reserve fund forecast to identify money not required immediately needs to be established. The estimate of short-term and long-term funds that the forecast will establish can be revisited annually, so there's an opportunity to ensure liquidity objectives and return objectives are continuously met each year. So as you can see from this slide, there are several benefits to applying Prudent Investor to long-term funds versus staying on the legal list, including that there will be no restrictions on eligible securities. Having said that, portfolios should be structured so they are considered prudent for a municipality's specific circumstances. There are also greater opportunities to generate better long-term returns while undertaking a relatively lower level of risk. That's because of diversification. Diversification can be achieved by expanding outside of Canadian markets or into higher yielding securities such as BBB bonds to earn better returns with little marginal risk under Prudent Investor. In addition, municipalities will benefit from providing input into asset allocation decisions, which inform the board's investment plan, and be able to leverage external advice and knowledge. So I can't discuss the merits of Prudent Investor without noting some key considerations. I'll speak to those that apply to all governance structures first. To start, while Prudent Investor does provide more flexibility to manage risk, diversification can only reduce risk, not eliminate it. In addition, better returns may not be realized every year, as past performance in a specific asset class or by an external portfolio manager does not guarantee future outcomes. Adoption also requires passage of an irrevocable bylaw, and going back to the legal list for the entire portfolio requires a regulation from the Lieutenant Governor and Council. Lastly, Prudent Investor requires ongoing support to facilitate annual investment policy reviews, long-term cash flow estimates, and enhanced reporting on the short and long-term portfolio investments. So in particular, creating an investment board or a Durham Joint Investment Board presents some unique challenges. Firstly, there are significant costs, likely in the millions, to establish and maintain an investment board or joint investment board, and that includes legal fees and board remuneration. As I mentioned, reporting requirements will be amplified. For example, in Toronto's experience, when they went to Prudent, they went from one annual council report on investments to as many as 25 reports between council and the investment board. Lastly, To do a joint investment board or investment board, Durham would need an exemption from the Ontario Securities Commission to invest and manage funds on behalf of other municipalities, which will delay investing under prudent investor. This delay could be up to 18 months based on previous waiting periods. So collaboration with local Durham municipalities remains a priority as we explore options to adopt prudent investor. This could come in the form of the Durham Region Joint Investment Board, if created, which would require a longer implementation period and higher costs, but would reflect a made-in-Durham solution for any interested local municipalities. There's also the opportunity to partner with One Investment to utilize its joint investment board, which would be more cost-effective and also faster to implement. However, we're still waiting on the final details of the proposed One Joint Investment solution, which is expected by year-end. Aside from prudent investor, the region can also look to invest legalist securities on behalf of the local municipalities. This would still, however, require an Ontario Securities Commission exemption to manage these investments on behalf of any interested parties. Alternatively, local municipalities can also increase their exposure to the existing One Investment legal list portfolios to diversify into equity and bonds, or continue their current investment practices. However, in either scenario, the region is committed to enhance investing efforts through training, networking, and partnership with the local municipalities. So if approved, next steps would vary based on the governance structure chosen for the region, but generally they would include council approval to create or join an investment board, update the investment policy, execute any legal agreements, and pass the required bylaws. Once the adoption of prudent is approved, work would begin on developing an investment plan with the board and transferring funds for investment. However, should the region opt to create its own board or joint investment board to invest on behalf of itself and any interested local municipalities, implementation will take significantly longer due to the regulatory and external expertise requirements just to get the joint investment board established, and that has to be done before any investments are placed. To conclude, prudent investor vastly improves risk-adjusted return potential for the region's long-term portfolio versus using the legal list, but it can have an extended implementation time depending on the governance structure chosen. So establishing an independent investment board or Durham Joint Investment Board requires the biggest commitment from a time, resources, and cost perspective, but ensures the greatest input on the composition of the board. Whereas partnering with One Investment is the most cost-effective option with an already established joint investment board and access to industry expertise. However, under all governance options, additional efforts will be needed to support the initial transition and ongoing requirements of the prudent investor portfolio. Thank you for your time. That concludes my presentation for today, and I'm happy to answer any questions you have.
Okay, Councillor Lee, we're having a second presentation from Investment One. If it's a question in regards to the staff one, let's do it now. Okay, thank you. Thank you for your delegation. Appreciate the information. It's exciting new stance we're going to be taking in this regard. So, Commissioner, next one.
So if Jennifer and Keith want to come forward, we'll get their presentation up, and they are both representatives of the One Investment Services. Jennifer Hess, some of you may recognize because she formerly was with the town of Whitby, and Keith Taylor has been with the One Investment for quite a number of years now, and has been very instrumental in creating the joint investment board, as well as working on the OCIO, which they'll speak to what all of that means. So again, I'll turn it over to the team.
Welcome, Jennifer and Keith, to our chambers. Looking forward to hearing what you have to say, and I think there'll be some questions after. So please proceed.
Thank you, Mr. Chair. Good morning, members of the committee. As Nancy mentioned, my name is Jennifer Hess. I am the Manager of Investment Services for MFOA and One Investment. And with me today is Keith Taylor, who's the Chief Investment Officer for One Investment. Today, I'm going to be just introducing who is One Investment, taking you through what Prudent Investor through One Investment looks like. Today, we're going to look at cover general oversight of One Investment, how our joint investment board works, the governance behind it, how we select our investment managers, and our overall investment approach. One Investment is a not-for-profit organization dedicated to serving the investment needs of the Ontario municipal sector. We were established in 1993, jointly operated by the not-for-profits LAS, which is AMO's business services arm, which is the Association of Municipalities of Ontario, and CHUMS, which is a subsidiary of MFOA, which is the Municipal Finance Officers Association. Oversight is provided by municipalities and investment industry experts. And currently, 41% of all municipalities in Ontario invest with One Investment, either through the legal list or the prudent investor options. Under the Municipal Act, One JIB is a municipal services board. We operate with a procedural bylaw, code of conduct, committee secretary, and closed meeting support, and more. We currently have a 9-member JIB comprised of investment industry professionals, primarily CFA charter holders, and current and former municipal treasurers. Currently, our 9-member One JIB, which was established under Section 202 of the Municipal Act, can only be made up of 25% of municipal treasurers as per the Act. The remainder must come from industry experts. Currently on the One JIB board, the municipal representation is from the town of Innisfil and the town of Bracebridge. And this is a skill-based board with extensive institutional investing experience and varied areas of expertise. Providing oversight of the One JIB is the One Investment Board, which comprises of 10 members. This is 100% of municipal representation and currently is represented by the Region of Durham, the Town of Scugog, and the Municipality of Clarington. The One JIB was founded just over 3 years ago and had 6 founding municipalities, including the Town of Whitby. And since our inception 3 years ago, 4 more municipalities have joined, with additional municipalities in the process of working together to join the One JIB. Currently, as Ms. Taylor mentioned, we are the only joint investment board for the prudent investor in Ontario. 3 other municipalities have set up or are in the process of setting up individual investment boards, and they are Toronto, Barrie, and Ottawa. Our investment managers are selected through a competitive process, usually using request for proposal process, is competitive and transparent. Our new partner was recently selected for the OCIO, the Outsourced Chief Investment Officer model, which included municipal representation on that selection. The Outsourced Chief Investment Officer will give increased access to a variety of investment products. Customized asset investment allocation studies are available, and the new ICO possesses municipal knowledge and expertise. One Investment offers both the Canadian and global equity and bond markets through both its JIB and OCIO models. This slide just simply puts what the different roles under a prudent investor program is. The municipality would adopt bylaws to join the One JIB and move to prudent investor and execute the One JIB agreement. The investment policy statement would need to be updated annually through the councils. And in the investment policy statement, the council determines what the definition of money not required immediately is. It's up to the municipality to keep one investment informed via the MCQ, the Multiple Client Questionnaire, sometimes known as the Know Your Client Questionnaire, and provide annual reporting to council on the results. One JIB basically takes the investment policy statement, the money not required immediately, the information from the MCQ, and we work together with the municipality to determine and bring forward the investment plan, which is then brought forward to the one JIP for approval, and then the investment plan is then executed. One Investment's investment outcome approach is primarily outcome investing. That's what we look for when we talk with municipalities under a prudent investor. We look at what your needs are, what your goals are, and we have various outcome categories based on when you are going to need the monies to do what you need to do. And they fall into 4 buckets: cash, contingency, stable return, and target date. And I say this is our current approach because under the OCI model, it does provide for a more niched allocation. So depending on what a municipality is looking for or how they would like it structured, we are able to work with them. And that brings me to the end of my presentation. Thank you.
Thanks so much. Appreciate that. Councillor Lee.
Thank you, Chair. Good morning. Hope you had a fantastic Thanksgiving weekend. And thank you for the One Investment Board for the presentation. Just a few questions. On the 10-member board that were represented by municipalities, are those the treasurers and the directors of finance that are represented?
On the One Investment Board, they are they're all financing people, yes. So they are
Okay.
they are the treasurers primarily, yes.
Perfect. What's the total you have under management then? The total money you have under management between the, I guess, 184 through legal list as well as the other ones on the one member?
Okay, I mean, all in, we've got in the range of about $3 billion. Our prudent investor regime currently has just above $600 million. The bulk of that invested internationally. We have a high interest savings plan that is it's a cash product that often, especially our smaller municipalities, can get a better rate than they might be able going to their local bank because we've got scale. Currently, we've got about 900 million in assets in that product, with CIBC and Scotia being the providers, and we're on the front end. And then we have offerings under the legal list, and the number escapes me at the moment, but we've got approximately $1.1 billion in our equity portfolio, the only way for municipalities to invest in Canadian equity, including Durham, who has a position there at the moment.
Right.
And then we have a couple of other funds that give exposure to Canadian fixed income within the confines of what the Municipal Act will allow. And it's a bit different than the broader bond market, just because of the other restrictions.
And then what are if we were to join the One Investment through a PI, what are the fees that we'd be paying as a region?
The current fees under One Investment are based on the product that is invested, but it is definitely not for profit. So One Investment is looking to just cover cost, which makes us different from other people out there. But through the negotiation process with Durham, especially looking at the OCIO model, which is coming in new, everything is through negotiation and will be established.
Okay. What would your year-over-year returns be then, like percentage-wise? Have we been successful?
That's a tough question. I'm going to paint myself into a corner. I can use broad brushstrokes, and that's the best I can do. Under fixed income, you should be able to get something in the range of the inflation rate plus maybe 1% or so. And equities, Canadian equities typically have been in the range of 6 to 9%. We don't try to sell the prudent investor option as a way to increase its returns. The whole point is you're putting your eggs in lots of different baskets, so you're diversifying your risk. So whatever the return is going to be from your portfolio, the hope is that it will be more stable and there'll be fewer surprises. It's all about diversification. But
Well,
yeah,
also
I
making
mean,
money too would also be part of the purpose as well, right?
Sorry?
We also want to make money too.
I imagine we would. Yeah, but I mean, the whole point is under the legal list, it's very, the Canadian equity universe is about 3% of the global universe. The Canadian fixed income universe is about 3% of the global. The Municipal Act confines what's available in Canada to smaller than that.
Right.
So, I mean, there's a lot more diversification out there that's available to be harvested. And Prudent Investor, I mean, we're very enthusiastic to recommend this route to clients because it's just a better bet. I mean, the one thing that we've noted in some of our presentations, not this one, the Municipal Act tries to control risk by controlling which securities you invest in. But if you, over the last couple of years, invested only in safe Canadian government bonds while interest rates were going up, you would have lost a lot of money.
Right.
There may be very, very safe instruments, but with better diversification, hopefully you'll be able to mitigate some of the surprises. And that's what Prudent Investor is all about from our perspective.
So as a region, we have to make a decision. We had, I think, 4 scenarios in front of us. How did one investment perform against Toronto, Barrie, Ottawa?
It's not comparable. It's just completely different portfolios. So it's apples to oranges. So it's just not fair.
So if
Barrie's
I,
got a very, very small equity exposure,
Sure.
and Toronto's just a different kettle of fish.
Commissioner?
so perhaps if I may, if you, in the details of the report that Dwayne drafted, he did a bit of analysis of had we been in certain products earlier, there's about a 1.94% potential differential if you look historically.
Okay.
So we are looking to earn revenue through this process, and Dwayne will wince when I say that. But the whole point is that if we're in a long-term scenario where we were historically, where you're making 1 to 2%, then that's all you can budget for.
Right.
You jump up to 5 for a year, and we're siphoning that additional revenue to support capital. But if we can get to a middle range because we're doing a whole mix of diversification, then we won't always, and this is where Kevin was speaking to, it's not a roller coaster ride of up and
swings.
down.
Right.
We find a stable point, and then we can more effectively budget both on the capital and operating side to have more money drawn in on a consistent basis. So that's my outcome as treasurer, to be able to do that.
Okay, I just have 2 more questions. One is, if we change our mind, so we go with one at first, and then we change our mind, is our money locked up at all, or can we just pull it at any time with a direction from council?
So perhaps if I may, this council makes their decision about the joint investment board. We would negotiate, and if things turn out well, we would, my recommendation is that we would go with one, but we are simply large enough that we can make other decisions. So Dwayne had referenced that we can't go back to the legal list without actually a provincial regulation, but we can change service providers.
Okay.
So that is always an option down the road.
And there's no penalty for that?
Well, we would negotiate,
It'd be
at
through
this point, there's
negotiation.
not, but we would negotiate agreements for, because we're going to be if council is approves, if committee's happy with us, we will likely be their first OCIO customer. So that's where we would be sort of helping, to some degree, help create this as a footprint going forward, so.
Last question is, in terms of ethical investments, so obviously I don't think we should be in the arms, investing in arms companies or anything like that. Do we have some say-so in terms of just like a list of like areas we would prefer to be in? Like, green energy as opposed to oil, for example?
Well, this is under development, so I can't, thank you. I can't speak to that quite yet, but I can speak to our current investment program.
Sure.
Under the legal list, the equity portfolio that Jerem is invested in at the moment, it's run by Guardian Capital, and from inception, the mandate was, it was a targeted risk portfolio, and they tried to dial down the volatility of the Canadian investments by limiting exposure to the most volatile sectors. Energy and materials. They also happen to be the most, well, not the most sustainable or, environmental friendly. So from inception, we've had basically about a half weight to those sectors. So we're actually getting the same sort of approach, diminishing the carbon footprint that we would otherwise getting just the TSX Toronto Stock Exchange exposure. And all of our managers currently are signatories to the UN PRI, which means that they support such initiatives. And our global equity mandate currently has no exposure to the energy patch. And again, it's not because it's an ethical view. We don't currently have products with that as the bias. They like sustainable businesses, and if your outcomes and your profits are dependent on the commodity price, management can't do much about that. And they prefer, our manager prefers to invest in businesses where management can get sustainable, good outcomes. And commodity prices being captive to commodity prices is not helpful.
But beyond green, which is absolutely admirable, what about we don't want to invest in countries with human rights, transgressions, right? Like, can we control that, or is there some assurance that we won't be investing in those, kind of markets?
This would come in with the negotiations and working with a partner for the OCIO, because it allows you to provide more of a niched selection. So depending on what is in your IPS and your MCQ, the OCIO partner can work with you to develop select products for your municipality that meets your goals and your needs.
Okay, that answers my questions. Thank you very much. Thank you, Chair.
Thank you, Councillor. Some would argue that Canada wouldn't qualify for that either. So, Councillor McDougall.
Thank you. Just a couple questions for clarification. Did I hear you mention that currently one manages $600 million underneath Prudent Investor? Is that correct?
Yes.
Slightly above that, yes.
And then there's about 1.1 billion is managed through one, but through the legal list. Is that right?
1.1 billion is through the One Investment equity portfolio.
Yeah, there's about another 400 million in our fixed income products, our legal list fixed income products.
So there's just so I have clarity here. Thank you. So there's the portfolio through Prudent Investor is 600 million, but there's another sector which allows the municipality to enter into Canadian equity markets through the legal list, which is not part of Prudent Investor.
Yes, so under One Investment started with the legal list portfolio of products because that what became available first, including equity, for Canadian equity under the legal list. And then when Prudent Investor became available in 2018, we started working forward to getting a joint investment board together, and that came into fruition about 3 years ago. So now we also have the Prudent Investor arm as well.
So perhaps if I may help a little bit. So as I'm not sure if this is where you're going. Clearly Durham has a significant investment portfolio. We have been interested in Prudent Investor from the beginning. However, because of our size in comparison to what One has created, we did not join initially because if we did decide we wanted to go somewhere else, then we had the potential to collapse because we would be too much of a dominant partner. So One has been working very hard over the last number of years with a whole host of us, large municipal investors, in order to create something. And so us large municipal investors had a number of meetings together for a long time to see whether we had interest in going on our own. And then some of us sort of narrowed that down to wanting to really have One provide a product for us. Unfortunately, the other player that was very strongly prepared to move forward won't be in existence in about a year and a half. So that left Durham at the table for the OCIO model. So that's why a lot of these questions are things that we're still working through. And that's why the report's structured the way it is because we had looked at all of us coming to one to get a large investor solution. And they're still putting that forward, but we're now at the forefront of sort of sorting out what that's going to look like, which is very exciting for us. But it does mean the opportunity then is there for the locals to come with an OCIO model as opposed to traditional as well. So it's good opportunities, but in case that context helps you out, the large investor model is what's driven the OCIO work that One Investment has created.
Thank you, Nancy. Yeah, that's kind of exactly where I was heading. So we are now the only one talking to one in terms of the large investors that are left at the table.
I would suggest we're the first because there's certainly a lot of, I'll say, larger cities. So all the big regions are really the ones that have been into this dialogue a lot. But there are a lot of large cities who also would probably have an interest in this once they understand a product that's out there and has a client and has. So I would suspect that, perhaps we're the first, not the only.
Okay, thank you. And then for further clarification, and I know you're working on this sort of stuff, I think I heard that Durham already has investments in the Canadian equities through One. I think I heard that mentioned.
Yes.
And so would that be maintained through the current policy, or would that go all through Prudent Investor?
It would depend on your definition of money not required immediately, and how your cash flow falls out, whether those investments would be transitioned over to Prudent Investor or whether they would remain under the legal list as not money required immediately. So it depends throughout the process. We have not seen Durham's cash flow, so we can't speak to that detail at the moment.
I mean, just to add, obviously, what we'd be investing would be appropriate. And there's going to be two parts of your money: the money required immediately, which is short term, and the money not required immediately. I would suspect that the equity portfolios would be deemed long-term investments not appropriate to be invested under the money required immediately portion. But other products we have available under the legal list that are, shorter investment horizon might be appropriate to stay there. And that's a decision of the treasurer and council as to how we deal with these. But I suspect the equity in particular would need to be disposed to be redeployed into the Prudent Investor offering.
Okay, thank you. I think I have some questions on the report, but I'll
Yep,
hold those.
we do have a report from staff under 8.2.
Thank you.
Thank you. Councillor Wu.
Yeah, thank you, and thank you through the chair and Jennifer and Keith. Just looking at your slide and the One Investment established in 1993, and it says within the slide that with the board of directors, there's Durham Region, Scugog, and Clarington are part of these 10-member board?
Yes, part of the 10-member board for One Investment.
Okay. And this one JIB, now, One Investment does the, I guess if you want to say, for lack of a better word, the, can I say, you would provide the details, I guess, as far as the investments?
Yeah, so we take staff reports to the One JIB, who approves the investment plans, and then the One JIB flows up to One Investment, the One Investment Board.
Right. Now, going back, I guess, and Keith, you mentioned something about the municipality of Clarington and using them as a case study. Can you give me a little idea on that one?
Okay. Clarington has been working with us for many, many a year. When we launched our equity portfolio, specifically for the municipal sector, this was launched, I believe it was in 2007, and Clarington was one of the first investors. And I'm not sure if people remember what happened in the financial markets in 2008, but it was not a happy time. And we have been, with the permission of the treasurer, been using them as a case study for some of the other investors that are looking at at equity investing because it's not a natural place for municipalities to jump on board and be excited because, the preservation of capital is very, very important, and the equity markets can misbehave like they did in 2008. So Clarington was one of the case studies we point out because they came in early. The market was unfriendly. It moved against them immediately. They lost some money, but they had the resolve to stay invested because despite the ups and downs, the returns in equities are much higher. And if you have the investment horizon, you should grow out of any deficit. And that is why Clarington's the case study, because they invested, they were very shortly in the red. And within several years, by holding their position and allowing the market to grow out of that deficit, they've made very handy profits. So we use that as one of the case studies saying that, we know you're nervous. We know there's concern about the markets being up and down and no control. If it's long-term investments and you have the resolve to stay in, it's our advice to be in there. And it's the same thing with Prudent Investor because this is all about long-term money. Deploying for, if you have a long investment horizon, that helps mitigate the effect of risk. So while councils are obviously sometimes concerned about what happens with taxpayer money, having something that augments the return while trying to control the risk is kind of obvious. Sorry, that's a long-winded answer, but we're very happy with Clarington, and we're glad they stay invested. And this is the case study that we put forward.
Now, would that director of finance and probably the deputy CAO, would that be now the commissioner of finance
You're
here
correct.
in the region?
Could well be.
Now, getting back to investments, and we look at the, I guess you use the term money not required immediately, or MNRI. Now, the threshold, what would you use that? Like, I think it has been mentioned 36 months or 3 years, but can that be varied?
That can be varied. The term is actually in the legislation. So under Prudent Investor, all monies not required immediately go to Prudent Investor. But the definition of money not required immediately is not defined by legislation. So that's up to each municipality to define. And I believe the region of Durham is looking at 3 years.
Right. Okay, thank you.
Councillor Carrot, or, sorry, Willie, you're done? Bruce, go ahead, sorry.
You're good?
No, I screwed up the buttons here. It's over to you.
Time difference getting to you?
Yes.
Okay. Just one question, actually, just one comment first. I think Councillor Lee did a great job with this question. It's not to diminish what the others involved, but just the various perspectives of what we want to be careful if we move in this direction, what we invest in. So just thank you for that. I only have the one comment, and I think it was Dwayne that made a comment that it could be in the terms of millions of establishing and then annual costs associated with it. Yet most of our discussions have been around the importance of diversification and having alternate perspectives from staff managing it. I just want to get my head around a little bit better, and frankly, I'm not sure which way to turn this question, to say it's critically important to have the diversification. It's equally important to make sure that the costs associated with that diversification are at a minimum recovered and hopefully some upside to that. So I'm just not sure which way to direct that question.
So perhaps I'll start with that, and that's one of the reasons why the large investors had been discussing this with One for some time, because One's already invested to create all these mechanisms. So we are now coming on as a client and we'll pay fees that are negotiated based on the services and the products that we look to. But if we decide to go it alone, then we would have to incur all of those upfront costs as a standalone entity. So that's why we're looking at this. We can get all the diversification, and this committee would set up our investment policy statement. You would have insight into all of those things that then go to, if we do negotiate with the One JIB, all of that goes to them to say, this is what this council and this decision maker says they want to see in their investment strategies, and then that's what they would be charged with, then finding the right products that suit and fit that. But that upfront investment is already done if we go through a partnership with the one.
Okay, that's helpful. That's all for now. Thanks, Chair.
Thank you. No further questions. Thank you for coming today. We do have a report coming up very shortly that will deal with this recommendation. So thank you for being here today.
Thank you.
Okay, folks, there's no delegations under administration. There's no correspondence. There's a report in regards to community safety and well-being plan update. The recommendation is received for information. Can I get a motion to get on the floor? Moved by Councillor Lee, second by Councillor McDougall. All those in favor? Opposed? Thank you. Sorry, I moved that very quickly. Is there any questions to the? No. Any comment from staff in regards to that? Commissioner?
It's me.
Sorry. over to you.
Alison Hector Alexander is on the phone, online. This is simply an update on the work that is being done by Community Safety and Wellbeing. A focus going forward is really ensuring that we have the data to measure outcomes. The Chief of Police and I co-chair the steering committee, and we are both really committed to seeing that outcome data and monitoring how we move forward. Work of the committee spans the entire region, including dealing with various issues that have arisen in the past in downtown Oshawa. It also deals with the impacts of human trafficking in a variety of other areas. So it's a very productive group, and I'm pleased to see it moving forward.
Questions? Being none, the motion's been moved and seconded and passed. Thank you very much. We're on to finance. There's no correspondence. The first one is the the report from the Commissioner in regards to prudent investor. Commissioner, do you want to open debate or discussion on this?
If I might ask if Dwayne wants to return to the podium in case there's questions that he might be more suited to ask, depending on the nature of your questions. Just as a quick note, we've set the report up this way on purpose. We would like to get your direction to go prudent, and then we would work out our best opportunities. So we would proceed to negotiate with one. They're here today. It's not a conflict because they are the only provider. So that's why they're here, to help you understand what they bring to the table. We have had discussions with all of the locals, and certainly I can answer questions around where they sit if you like. From our perspective, the most efficient likely is to have negotiations with one, and if that works out in our favor, then we would proceed down that route. But certainly we wanted you to be aware of all the options and are happy to answer any questions that you have on the report.
Okay, there is a recommendation there, and I know we have some questions, but I'd like to get it on the floor. The mover for the recommendations, moved by Councillor McDougall, second by Councillor Garrod. Councillor Lee, questions or debate?
Thank you, Chair. Through the Chair to the Commissioner of Finance, along the lines, so I'm confused about the recommendation. So in a sense, you want to speak with the other municipalities in Durham, but the recommendation ultimately is to partner with one investment as opposed to creating our own, correct?
That's true. So maybe I'll add a little bit of gray area there, I've had a number of meetings with the treasurers, and Dwayne and I met with them at the end of August in our last update to them on where we're at. They're at various stages of evolution with respect to their investments and various levels of funding opportunities. At this point, the only municipality that's really at the forefront from a local is Clarington, and I believe they're taking a report this month to get direction. So essentially my feel is that if the locals aren't really at that stage to be ready, then it's most efficient for us to go forward, and if Clarington Council chooses to go as well, go direct to one. Again, that's up to them. One of the things that I was thinking with respect to the smaller municipalities is that once we get through all of this work with respect to getting ourselves set up as prudent, remember we still have those monies required immediately, we could then start to pursue that OSC exemption in order to invest the smaller municipalities' money with us, if that's one of the partnership things that the locals wanted as a way to still have a local partnership. And they all have the ability to go to one today for that legal list and prudent. But if we wanted to still have a Durham strategy, we can still certainly do that. There is still also possible discussions with one to be our OCIO model, and there's still a general potential that we could do a JIB through one. So it wouldn't be the one JIB, but it would be a Durham JIB utilizing their whole structure. And we would then we'd have to figure out how we would pay for service for a whole lot of things. So that's not entirely off the table. It just gets more complex the more we try to create something different. It adds more complexity. Our thought is to go the direct route and to help locals even that want to go the direct route. Dwayne and his staff we're ready to help the locals go through this process with us. So we would go through the one JIB, but we would also help. We have a lot of work we would need to bring to this group. Your staff would have a lot of work to bring to your local councils, but we could try to help them along as well.
So it just seems premature. Sorry, first question before I get to that point. How many of the 8 Durham municipalities outside of Clarington have expressed interest in joining the region and starting a JIB?
So right now, Clarington wants to go prudent in whatever mechanism that makes sense, and if that's a Durham one or direct. Oshawa has indicated that they already are satisfied with their current investment approach. Whitby is prudent. They're one of the founding members of one. Ajax and Pickering have indicated they're interested in just hearing as we go along. They're not interested in participating at this point in time. And the 3 northern municipalities at this point don't feel they simply have the dollars for the long-term investing. So they're more interested in whether we can help them get better returns on the shorter term investing. And we're certainly would be looking to do that if they're still of interest once we get through the bulk of this workload of getting ourselves prudent. Then I think they're interested in us helping them more on that short-term monies.
And you don't see any benefit in like waiting for these other municipalities to catch up, finish our negotiations with one, and then present back to finance about like, hey, it's 5 of 8 or 3 of 8, and this is the benefits or not benefits.
So I would suggest to you that the only one that's really actively interested is Clarington, and they're already taking a report. We've been sharing information to make sure that we're not misaligned. So it's really the only one that is anywhere near on any horizon. So the region would have to wait a significant amount of time. The recommendation B here is to work with those interested and negotiate with one and sort out which avenue we're going to go. So I wanted this committee to know all the goods and bads of all of those different things, but move forward with all our options open, but then be able to make a decision if the negotiations go well with one and it's very favorable. Then we could also work with the locals and try to bring them along in that process as well, the ones that are not at the forefront today.
And why is it so much more expensive for us to start this than Toronto? It almost looks like almost double the costs.
So Toronto started a number of years back, and they're an investment board, not a joint investment board. So they're only investing on their own behalf. Same with Ottawa and Barrie. We have 2 options. If we just go on our own, we would be an investment board. We wouldn't need the OSC issue dealt with, but there's still a lot of work, and maybe Dwayne might list off some of the things that are necessary for us to go through that process.
Oh, it's on, sorry. So, I mean, to get it, just the legal fees to develop the agreements, to get them, all the parties agree to the terms, to do the upfront work, to, prepare the cash flows, hire the managers, hire a compliance officer. There's a lot of work that has to go into just setting up the foundation to even create a joint investment board upfront.
Why is a board remuneration that much higher then? Like it's
Well,
95, like Toronto's like 725 or 95,000. Like, why is it so much more? Why are we paying our board members that much more?
It's probably a larger board as well, and as the board grows to accommodate additional municipal treasurers, because there is a 25% limit, you have to add 3 members this time around just to get an additional participant on the board. So that's an ongoing cost that doesn't go away.
Fair enough. Just in terms of comment and debate, I think it would be prudent, not prudent, sorry, not prudent's the wrong word. I think we should be,
Small P.
yeah, small p. I think the region should be considering their own kind of investment board and becoming our own, deciding our own fate. One had a very good presentation, but in this time where finances are as tight as possible, I think we should make the investment in ourselves to create the best avenue of returns. But I understand as a government body, we are more risk adverse, as we should be. So I don't feel that strongly about it, but I think it's something we should be considering. And then if we were to pursue the one avenue, and then down the lines, we can switch to our own investment board, and the cost would be the similar, I assume.
Through the chair, maybe two things along with points. If we went with one investment through their JIB now, we could certainly make other service delivery choices down the road. If we chose to then set up our own investment board, yes, we'd have to go through that whole process. The one thing I would suggest to keep in mind, because we are likely their first large investor under the OCIO model, we actually probably have a little bit more ability to chart the course than if we were joining later. So just because we'd potentially be joining one doesn't mean that the whole point of an investment board is that you have control of your destiny in the sense of laying out what council's wishes are, what our objectives are, what our priorities are, and having access to very high-level skilled professionals that would then bring those products to us. So the flexibility will always be there, but being in on the ground floor probably gives us a little bit more influence on the first range of products that get developed. So we sort of have a plus there. It's kind of like being a founding member on the initial side of things. But that being said, certainly down the road, we would always be able to make other options if we weren't satisfied either with price changes or with wanting to have our own unique strategies.
And then in terms of budget hit, would this be in effect for this year's or this coming year's budget, or it would be still drawn out?
So through the chair, if negotiations are successful and we're satisfied with what one JIB brings to the table for us, we would be looking at, I think in the report it says spring of 2024, depending on timing. So I would be so bold as to say, and Nicole's in the room and will wince when I say this, I would be so bold as to say that we would factor some success of this into our 2024 budget, because it would come into play. Returns are long run, but I think that's the objective, is to try to find relief sooner rather than later.
Okay, and a lot of these costs would be capital, not board costs would be operating, but for the most part, it'd be one-time costs, correct?
So through the chair, if we go it alone, the board costs would be annual, because you have to have that professional board throughout. Compliance costs would be annual. We would have significant legal, because you have to have legal sign-off every year. You audit every single fund to make sure that they are performing based on what your agreements are with the fund managers. You would have RFP costs on a fairly consistent basis as you were assessing and entering new areas. You would have customized managers for those areas. So all of those, if we were on our own, would be ongoing costs. The initial work to get the OSC exemption, for example, and the legal work around creating all of the bylaws and the actual services board, all of that stuff potentially would be one time, but the ongoing maintenance of it is significant as well. And the plus through the way I envision right now our discussions with the one is that they would recover their costs through the discounting on the investment products.
Right.
But again, that's all part of our discussion of how that would be structured.
And then last question, Chair. You've obviously spoken to I'm hoping you've spoken to your counterparts in Toronto, Barrie, Ottawa. Have they generally shown any regret, being like, oh, we wish we did the one versus going it alone?
So I'll suggest to you, City of Toronto is different because they have the City of Toronto Act, and they were always going on their own. Ottawa, we've had lots of discussions. For years, we've had discussions with Ottawa around the large investor. And when it was within that Nicole Pincomb's portfolio, they even hired consultants to see what could be done in that large investor group model. And they've decided there is an organization based in Ottawa that does a lot of pension and trust work that is closely affiliated with Ottawa. It appears that has been their preference, but the legal ability wasn't there unless they go through and create their own. Barrie is a little bit of a different scenario, and I'm not sure how evolved they are, but one is the only joint board that we can join.
Okay, thank you very much for those answers. Obviously, you guys put a lot of effort.
Counselor McDougall.
Thank you. Just some clarifications in the report. On page 32 of the report, I think it mentions that we have about, hang on here, 3.9 billion in investments and 2.3 billion in assets. Is that what we're looking in investing through Prudent Investor?
So through the chair, Dwayne was mentioning the whole the work around cash flow that we have to do, and we need to marry this up with our capital budget and our long-term capital budget. So no, we would be looking at needing to have cash flow on hand for all of the normal operational things, and even, for example, our capital program, the first 3 years of it. But as you know, we have major capital projects. The costs change dramatically. They get moved forward, they get moved back. So we were recommending our first blush at this as 3 years, 36 months, determining what all the cash would be needed for that amount, and that portion of it would remain essentially legal list, and the balance of it would. My guess is, and this is without a single pen to paper, is that we'd probably be looking at half of it going longer term and half of it staying shorter term. That's to just random. That's literally, no, because that's the next step for us, is to actually get into the nitty gritty of what would go which direction.
So then, when I look at, there's a graph on page 28 to 32, which shows the legal list allocation versus the prudent investor allocations, which is roughly displaying about the 1.9% difference between legal list investments and prudent investor investments. I think that's what you had mentioned. Is that right, Dwayne?
Yeah, that, based on historical returns, that's the delta.
So we would be looking, by staying where we are on legal list, we would be looking at leaving on the table about 1.9% of $3 billion.
Based on that historical kind of analysis, as everybody's mentioned, we can't predict anything, particularly markets, but had we done it at the time, that's the delta we're looking at. So as an approximation for what we could be doing, it's not a bad one, given the roller coaster ride that there has been at times during that time frame. So, but of course, we can never make any promises with these things. If we could, we'd be really in good stead for many.
No, we've seen inflation do a number to all of our budgets. So I'm assuming that moving towards the direction of prudent investor and hopefully gaining that 1.9% when inflation is high and investments are moving well, that'll help close the gap from a safe investment to a more market-driven investment, I think.
And I keep speaking for Dwayne, my apologies. I think I can't emphasize enough the diversification, because that's really where we can see a lot of positives and a lot of avoidance of negatives, because both sides of the equation are important to keep in mind, and that diversification helps us to keep from bottoming out, because you have a mixture of things and mixture of timeframes, and leverage upsides as well. I don't know, Dwayne, did you have anything to add there?
The only thing I'll add is to keep in mind that the prudent portfolio is for the long-term funds, or the money not required immediately. So we'll always have to take a long-term view of that. So the returns will be improved, but over the long term, it won't be necessarily a really quick gain.
Just looking at the recommendations. So I understand that one further question of clarity is did I read that should we make the move to put a bylaw in place to move to prudent investor, that it's irrevocable?
Pardon, I didn't catch the very
Did
last.
I read that if we put in a bylaw to move to prudent investor, that it's irrevocable?
So through the chair, yes, once you go prudent, you have to stay prudent unless the province actually enacts a regulation to get you out. However, you can always decide on your service delivery provider.
Okay.
If I can add,
Yeah, please.
to Richard. So if we were to create a Durham Region JIB and on our own, it would be really difficult for us to actually leave to go with another service provider, because we would be, say we partnered with other locals, we couldn't leave them on their own. So that's just an added complication if we were to do our own JIB.
Okay, very good. So on the recommendations, some questions. So the second recommendation, or the first recommendation is that we move towards a prudent investor. That's clear. On the on the second recommendation, it says that we would talk to One Investment and then we would have receive a report back. But the third in recommendation states that that the Commissioner of Finance and Chief CAO be delegated the authority to sign the documents and move in that direction to the satisfaction of the regional solicitor. Number 3 doesn't require a report back, so if you're satisfied with One Investment, you can move under number 3 with no report back to us.
So through the chair, we have to bring a bylaw to you. So that bylaw would have to come through this committee. My envision, and I'm happy if you want to edit, my envision for item C was more, we really don't know how many documents and what we're going to be looking at with going prudent. It was more to give us that flexibility should there be things that we need to execute. It was not intended to take the authority away from this council.
Isn't C tied to the approval in A?
We can certainly make sure that, if we need to adjust it to reflect that. But, so this committee this council has to pass a bylaw, and we don't have that before you today on purpose. So it does have to come back through that. We just wanted to work our way right to sort of the end of a process and bring you something that we feel makes sense.
Further, if I might, through you, Mr. Chair. I'm assuming that in discussions with One Investment, you said that there was another large player at the table, and they're no longer at the table because they're not exactly a player. I'm assuming that there's other cities in Ontario, be it Kingston, be it maybe Brampton, Mississauga, that might be interested in this in the future. So we might not be the only large player at One Investment as we move ahead.
Through the chair, I would suggest to you that if this goes as well as we think, I would assume that that would be the goal. And the more players that come in, the better off we would be, because then the costs as well get spread out over more players with respect to that recovery side.
Okay, very good. And then, so in terms of, I know we've had some discussion about in terms of costs of setups and costs of doing business, but I mean, relatively speaking, compared to the investments of $3 billion, I don't think those costs are very large. I can't say I'm not familiar with the balance sheets of large investment organizations, but would this be in terms, reasonable compared to those, or is it less, or i.e. McKenzie, or you name it?
I can't speak to private, but I mean, in terms of if it's reasonable, yeah, it probably wouldn't be that much basis points versus how much we have in total to invest. It's just the ongoing cost and commitment to manage the prudent investor regime if we went on our own, I think is the bigger issue.
So through you, Mr. Chair, could we look at that as a percentage point in terms of, if we're projecting that we're going to gain 1.95% approximately, or 1.9% by going prudent, could we look at how much of that 1.9% it would cost us to structure this and cost it out?
So through the chair, I think my intent through B is essentially that, because if we're negotiating with one and they're here at the table, to be fair, we need to know that that's a good deal, right? So we would need to then at least have some benchmark to look at that. So we would be looking at trying to figure out how to advise you that that's a good deal. And by doing that, we'd have to figure out what it would mean if we didn't. So we'll look at how we would phrase that, though, because whether we try to reflect it in basis points or a capital cost development, we'll figure that out. But certainly if I have to be able to tell you why I think it's a good deal or not a good deal, and that would imply that I need to give you a comparison to look at.
Thank you. And I would just say that I think when I'm looking at managing $3 billion, I'm not looking for a deal, I'm looking for the best value. But thank you.
Okay, I have a list here. Chair Henry.
Thank you, Chair. Just one quick question. The front-ended costs for all of this, as additional organizations join, the front-ended costs, the work has been done. The groups that were in the beginning paid the most. Will any other municipality come in, and will there be a rebate to those who started at the beginning?
So I'll answer on behalf of the region with respect if we went our Durham-only option. Perhaps one, maybe Jennifer can speak to, if we're essentially, maybe I'll start on Jennifer, if you don't mind. The initial development of Prudent has been funded through the investment returns of the legal list, essentially. So the one side has funded all the startup costs for the other. But going forward, if there's any other costs, perhaps I'll let you, Jennifer, talk about how you envision other large investors coming on and whether that affects the cost on those that are first in.
So the cost for one investment to be established and to bring forward Prudent Investor as a whole was a cost absorbed by CHUMS and through LAS. And their founding municipalities do receive a founder's discount on their fees. With the OCIO model coming on board, again, any fees that would be established would be strictly to cover the governance cost of the JIB. And as Nancy alluded to, it is the more municipalities that are at the table, the less the cost is dispersed. But for the actual fees for the OCIO, that is, we're very early in the process and are still signing the agreement with our partner. So everything is to be established and negotiated.
And then through the chair, if Durham and its local municipalities want to create their own joint investment board, then that would be a decision of this council, whether Durham would fund it all or whether we would charge the locals some, right now through the insurance pool as an equivalent, we allocate administration costs. So that would be a discussion point if we were going on our own.
Thank you.
Councillor Leahy, online? You're on mute, Chris? No. It's not working.
Councillor Leahy, could you please make sure that the camera and the microphone buttons on the lower right-hand side of your screen are grayed out? If they're red, they're off, and if they're gray, they're on.
Councillor Leahy, I'm not getting you, so you can try and call me if you want to, call my cell if you want to pose a question. I'll go to the next one. Councillor Wu.
Yes, and thank you, through the chair and to the commissioner or Dwayne. When you're looking at, I guess, page 3 of 32, 5.4, the eligibility of municipalities. Now, Commissioner, you and Dwayne, I think, have talked with other treasurers within the municipalities of Durham. And now, how many would not be eligible in meeting that criteria of A or B?
So through the chair, I believe it's the 3 northern municipalities would not be eligible. Dwayne, do you have any more details with respect to the Lake Shore?
Actually, if we created a JIB, once all of the members have $100 million in total to invest, all would be eligible to join Prudent Investor. So,
Because as Councillor Lee had mentioned about going with option C, Durham Region Municipal JIB, local Durham municipalities mean, I think the idea is not to leave anybody behind. Now, having said that, and I go back, I think the commissioner, when you were with the municipality of Clarington, you helped establish the Durham Municipal Insurance Pool where we have and tried to get all the municipalities of Durham within this pool, and not everybody was in that. But as you had mentioned, as they would join, I think the last one was Oshawa, that they would have to split some of the costs that we talked about, the upfront cost. And this would be similar. That's what I'm trying to draw that comparison.
So I'll make the analogy to what Jennifer mentioned. Those in in first sometimes get a bit more of a favorable rate. Those coming in later, the ones that are not founding members, would get the market rate, so to speak. So similar for the Durham Insurance Pool, when Oshawa came on, we actually had to set up a new pool almost, if you will, and they had to cover the costs of the actuarial work that was necessary. So you could make a similar analogy with respect to consulting costs perhaps needed to bring additional people on stream.
Okay. Now, my next question, and again, looking at page 15 of 32, and this is regarding the, I've got to get to it now. Sorry. Now, I think Keith had mentioned at one time, but 2014 to 2022, within that period, we went into a global recession. Was not a good time for any investments, and I think I'm still recovering from that. But
You had to come back.
But prudent investor, it says in there, I mean, obviously, now, 5.98, whereas if you went with the legal list, 4.04. Now, again, obviously, prudent investor outperformed. But again, there's that caution. Historical performance provides context, but may not be a reliable indicator. But nevertheless, moving forward, and I don't know, Dwayne, if, through the chair to Dwayne, I guess there's no guarantee that we're always going to see an upside to this degree, 1.94%.
Through the chair, no, there is never any guarantee, and I would say annual, there may be years where the performance is not so well or so good, and other years where it's extremely good. But over time, it should average out.
And I think that's what Keith had mentioned, the investments, you have to be in this for the long haul.
Yes.
And especially if we're looking at the MNRIs, and if we're using the threshold of 3 years, you have to be in it for the 3 years, and then beyond that, I guess one can choose to go ahead with up to 3 years, 1, 2, or 3 years with that investment.
So through the chair, so up to 3 years will be managed internally by my team. Beyond 3 years, those funds will be bucketed into different, let's say, objectives, and some of them will, it could have 3 to 5, 5 to 7, 7 to 10, based on when the funds are needed, and the investments will be deployed as such. So the funds that are required, after 10 years will be more risky versus the funds that are required in the nearer term.
And my last question, and I guess this would be through the chair to the commissioner. So the options, I mean, you've laid it out, A, B, and C, and D. I would imagine A and B are off the table, and we're looking at C and D. When you're looking at this.
So practically speaking, my thought is we would be prudent with one investor or prudent with the Durham municipalities. Really, there's, I won't say there's no point, but for the region to just go it alone and create an investment board and do all of that, we can certainly do that. But if we're going to do that, we might as well try to bring in the locals. Now, keep in mind that delays things because of the Ontario Securities Commission requirements, and that's, a year to 18 months. There's no predicting how long that would take, and that would have to be first. My thought is, with respect to helping the locals, again, each local has to determine how risk averse they are and how much of their funds are shorter term. My thought there is, as I mentioned earlier, that once we're through all of this work for prudent, as Dwayne mentioned, we still have our monies not required immediately. We could go and get that exemption for the locals then, for us to invest within our funds required immediately in that short term, so Dwayne and his team could then help the locals so that they're not left out. Some of the locals could go direct to one, they could all do that tomorrow. But if it is a comfort factor that they feel that they want Durham staff to be assisting in their investments and the flexibility that perhaps we would provide, we could still do that as a second step. Once we get prudent in whichever avenue, we could still then go to get that exemption and deal with all of the shorter-term investments on behalf of the locals. So we wouldn't be leaving them behind if there is an interest on the locals' perspective. I would suggest to you the locals, Whitby is already there, Clarington is pretty much there. The rest, I do not get a sense that there's any imminent activity that would drive them to move forward, and that would be a problem with respect to us proceeding expeditiously.
Okay, thank you.
Councillor Leahy, I have you on speaker if you have a question.
Yeah, let's see if this works. Just my only question to Commissioner Taylor, just again for the costs, are we really, like, I'm reading the report, there really doesn't seem to be any huge material cost difference between joining the JIB or just trying to go on our own. So isn't there a benefit for us to joining the one JIB?
So through the chair, the benefit to us joining the one JIB, subject to successful negotiations on all the terms, is that we wouldn't have to put out that upfront $1.5 million, I'm rounding, to set everything all up. That's where the savings would be. And as I say, subject to successful negotiations on our terms with one.
Yeah, and it's been super successful for Whitby, so I'm a huge fan and huge supporter, and I think the region should get into it as quickly as possible. But once we're in there, to your presentation, to your point, aren't we going to see better returns by being in there with this large organization to give us a better return on our investments for taxpayers?
So through the chair, I'll say yes. That's the whole point of the OCIO model that one has created, is to deal with large investors and be able to satisfy perhaps us being more demanding than their normal group of prudent, and in order to do exactly that, have a better diversification and a more consistent predictor of where we could be on a budget process year to year, more consistency and perhaps better returns with respect to our large capital projects as well. As you know, once you approve a project, the funds are set aside, but it could be, depending on EAs and all kinds of things, it could be quite a lengthy time before we actually spend the money. So this is where we could see some offset to the inflationary impact of those capital drives. So it is all pluses from my perspective with respect to going prudent.
Yeah, so 100% agree. We're saving money, we're going to make more money and make more money for residents, so we have to raise taxes less. So 100% supportive. Thank you. Thank you, Chair.
Thank you. Chair Henry, you had a, go ahead.
Thank you, Chair, and sorry for the second round. If we went out on our own, I think York Region's on their own.
So through the chair, I'll give a high-level answer. Dwayne has had a lot of connections with them. So all of the large municipalities are active investors, but they are not prudent.
Okay.
So they do legal list work.
So I think the question, and I appreciate that, how many additional employees does it take to manage this fund? I've got a rough idea of what York Region is, but if I'm not sure you have that, but.
So I'll ask Dwayne. I think you may have round numbers, certainly significantly more than what we do at this point. Dwayne?
York's an interesting case because they have a very well-developed investment team. I think somewhere around 8 staff, which is more than what the City of Toronto even has. So they do trade very actively on a daily basis.
So, thank you. So that's 8 full-time staff?
In and around, yeah. I'd have to confirm.
And a paid board on top of that?
So through the chair, York isn't prudent, so they don't have a board.
They don't have a board.
So they're only doing the legal list. So, but they buy and sell, so they can only buy bonds and GICs and those things, but they buy and sell them regularly to make what we would call capital gains in your sort of personal side of things. The region right now, we buy and invest in and generally hold to maturity because of the value of of what we're investing in.
So if we did it the other way, we would have to hire additional staff.
So through the chair, if we did not go prudent, if we chose to remain on the legal list, then absolutely, in order to get better returns, to even come close to equating, even without being able to do the equities, we would have to have a significantly larger team. Dwayne refers to his team, it's he and Sajeev. So we try to be delicate in saying team, but it's a team of two at this point. So.
But our investment would be relatively close to what York would be, so it would be potentially eight more people.
Through the chair, and as well, Peel also has quite a significant team because they are very active investors as well. So the slightly different setups and how they administer it, but if we do it legal list, we have to have the ability to do that, or we will simply see the same, we'll just simply see flat returns in a sense.
Okay, thank you.
Councillor McDougall, last chance.
Will do. Thank you, sir. I have an amendment to make to C just for clarifying purposes when the time is appropriate.
Okay, appropriate would be right now.
I would just like to add, after it says, delegated authority to execute any documents or agreements that may be required to put the PI standard into effect, I would just like to add after that, by direction of council or committee, whichever word is better.
Certainly, or through the chair, concurrent with bylaw approval, because that also has to come. Whatever works for you is I'm perfectly content with.
I think, to be honest, based on the feedback from the commissioner, that's direction could be included. I think it's a friendly amendment to the process.
Okay, that's acceptable then.
Yep.
Just one other further clarifying thing. When we're looking at Part B with the one investment, and it sounds, very positive, I would just like to say when you look at setting it up, that we consider the terms for the divorce or the Brexit should it ever occur. Thank you.
Certainly.
Okay, folks, the motion, well debated. Thank you very much. The motion has been slightly amended as a friendly amendment to include, by direction of council, concurrent with the bylaw approval. So it's duly moved and second. All those in favor? Opposed? That item is carried. Motion for a 5-minute recess. Councillor McDougall and second by Councillor Wu. All those in favor? Thank you. I know Counselor Leahy is going to have to leave us for a doctor's appointment. I know Counselor McDougall has other commitments too. So I'm going to take a roll now and we'll go through. I think we'll still have a quorum anyway. So roll call, please. Electronic. Thank you. We have quorum. Next item for consideration is what? Okay, moved by Chair Henry, second by Councilor McDougall, that finance reports B, C, and D be considered. Any polls? Councilor Lee? Okay, we'll poll B, and any polls on C and D? Okay, all right. Let's call the motion on item C then. All those in favor, opposed, carried. Councilor Lee, item 8.2B, water meters and related equipment software.
There. Thank you, Chair. Just point 2.4, it says Neptune guarantees the pricing paid by the region of Durham for the product and services being supplied will be equal or lower than the lowest pricing offered to any other clients with a similar scope of work. Do we have people checking that?
Through the chair, yes.
And they have been consistent. We have been the lowest comparable, right?
That's correct.
Okay, that's perfect. Thank you, Chair. I'm happy to move it.
Motion is duly moved and second. All those in favor? Opposed? That item's carried. Moving on to D, Councilor McDougall. I'm on, there you go.
Thank you. I might have hit it at the same time as you did. Thank you, Mr. Chair. Question on D and the budgets for the land acquisitions. Were those numbers included in the 2023 capital budget for our considerations?
So through the chair, they were included in the capital budget with a proviso that it had to come back to this committee for subsequent detailed approval based on, because this is a new service delivery. And certainly any questions, that's why General Manager Holmes is here. So it was in the 23 budget, including the debenture reference, but it had a flag in it to say that you would get further background information before a final approval.
Okay, so we've already approved these through the 2023 budget process, essentially. I'm just asking that. If
Yes,
This was that or,
it's included in the numbers, yes.
okay, very good. That's all. Thank you.
Motion's duly moved and second. I'm going to call the question. All those in favor? Opposed? That item's carried. Advisory Committee resolutions, Durham Region Anti-Racism Task Force Resolution. Chair Henry.
I'll give you a motion to refer this back to staff.
Motion to refer it back to staff, moved by Chair Henry.
I can give the explanation why.
Okay, go ahead.
So there is an existing flag policy. This is outside of the realm of that policy, and it will need to be investigated. There is a considerable amount of work that'll have to be done. Yeah, eventually, after the work is done. So I would probably think early in the year, in the new year. This is already October. There is the existing policy. There is an existing policy, so we'll have to work through that policy.
I forgot.
Well, I don't have a seconder yet, so, and they are debatable. Second by Councillor Wu. Councillor Lee.
Thank you, Chair. I think there is an argument to be made for us to pass this based on the fact that the precedent that the Ukrainian flag, which was up until I think like only a few weeks ago, in spite of our new flag policy, I think there are extenuating circumstances that go outside the policy. I would move against referral and to support the task force, but that's just my 2 cents. Thank you, Chair.
Chair, to follow up on, just a follow-up.
Your mic's on. Go ahead.
We also follow the protocol of the federal and provincial governments. And there's existing policy protocol with both levels of government as well as ours. So it isn't as easy as just passing this, so.
Okay, there's a motion to refer it back to staff. It's duly moved and seconded. If there's no, No further debate. I'm going to call the question. All those in favor? That item is carried. Sorry, opposed? That item is carried. Confidential matters, there's a significant report in camera that I'm prepared to go into camera if there's questions. If not, there is a recommendation. Okay, the recommendation, it's confidential report from the Commissioner of Corporate Services in regards to non-union management exempt group. It's moved by Councillor Lee and seconded by Councillor Garot to approve the report and the actions set out in it. Can't really have debate on it. So I'm going to call the question. All those in favor? Opposed? That item is carried. Any other business? Commissioner, can you update us in regards to the discussions that happened last month at this meeting and subsequent at council in regards to 2024 budget?
So through the chair, as I mentioned, and just to reinforce, it was guideline that came before you, not the final budget. So concurrently with that guideline coming before you, the department heads had been given their drilled down guideline and had been working very hard to try to figure out how to get to that guideline. And now what we've done is allocated 2 additional guidelines to them to reduce it by 1 and reduce it by 2, because this committee was very clear that they wanted to know the implications. So the department heads now are working very hard on what the implications are to move down the 1 level and the 2nd level. So we are compiling all of that so that we will be in the position to bring a report to you for your November committee cycle with the implications of those scenarios. So the department heads, all the departments as a group are working very hard to satisfy those requests that this committee put forward.
Request, there we go. Chair Henry.
Thank you, Chair, and through you to the Commissioner. Commissioner, we have a number of expenses that, and I'm going to use asylum seekers in particular, that we're paying for. One, where hopefully we will be reimbursed for the entire amount of money that is being spent because we are caught in this particular challenge. That will be applied to the budget. We won't see that cost, or hopefully that cost will be removed from the budget for next year. And that would be a significant reduction in the budget just on asylum seekers. Would that be correct?
So through the chair, I'll actually have to, Nicole Pincombe is here with us on the asylum seekers. I think generally we've been trying to fund it from one-time funds that could be repaid. But Nicole, perhaps if you can comment.
Thanks, Nancy. Through the chair, Nancy's correct. So for the 2023 budget, we had included a very small, not to the magnitude, we didn't know what the and we didn't know what the impact would be when we were setting the 2023 budget. So we set a modest amount aside in the 2023 budget to be funded from reserves and reserve funds, one-time sources, in order to accommodate the anticipated need for funding there. For 2024, hopefully we are successful in receiving senior government funding to offset it. In the event that we do have to include something, our intent would be to use, again, one-time funding to be able to offset or to bridge fund until such time as the federal government or the provincial government were to provide offsetting funding for it. So right now, in terms of the guideline that's before council, the guideline that is before you did not include any anticipated costs associated with refugees or asylum seekers.
So perhaps if I may, through the chair, we have been building up our funding tax levy support for housing and homelessness. It's just this specialty designation of asylum seekers that it's not easy to carve out per se, but for housing and homelessness, we have been building up our tax levy support to that over the last 2 years because we did not have a decent footprint there.
And Chair, just to follow up on that because the Commissioner brought it up. I have an absolute difference opinion than the Minister who said that homelessness is a municipal responsibility. I also have a challenge with, have we received any funds related to our costs, related to the support we have provided and we should provide to our Ukrainian and Afghan allies?
Through the chair, no, we have not.
And, you know, the challenge is that we are paying for these things off of the property tax base, and property taxes were never designed to support asylum seekers, refugees, homelessness, mental health, addictions. None of that was what property taxes were ever. So can I continue down this path, Chair?
Yeah, sure, go ahead.
So, correct me if I'm wrong, 5 years ago, we spent, what, $27,000 on homelessness?
Through the chair, tax levy supported, I mean, DLHC as well, but on specific to homelessness, yeah, it was 27,000 or thereabouts.
Well, we won't bring in to our local housing corporation or our not-for-profit housing corporation, because those are other challenges. I know what the amount was that we spent this year, but I'm not sure the members of committee know that we spent budgeted $75 million.
So through the chair, that does pick up all sources of, but yes, so that picks up our support to our social housing providers, and it picks up our support to DLHC. But even just from a tax levy perspective alone, I think we've increased that by $7 million over the last couple of years.
So,
And your point is taken as well, if I may, even though we found one-time funding from reserve funds, as you all know, our reserve funds are very much dedicated for regional purposes. So your point is taken there as well, that if we don't get paid back, it does have an effect to taxpayers. It may not be on next year's tax bill, but it does in the overall scheme of things, because those funds will not be there to support the things they were accumulated for.
but in fairness, our proposed tax increase for next year is generated by things that we have no control over.
Through the chair, there is a heavy weighting on a number of things we have no control of, yes.
And if we were to remove the things that we have no control over, we would be at inflation or less.
Through the chair, I hesitate to commit to that simply because we have service levels we're increasing. So for example, police and transit, right? So this committee has made decisions to increase service levels beyond what they used to be. And so that has a bearing here in this discussion as well.
But, so I'll make it easy for, we would be at a very different number than we are today.
That's correct.
Okay, thank you. It wasn't really a rant, it was done through questions, so thank you, Chair.
I disagree, it was a rant, but a good rant. Councillor Dougal.
Thank you, Mr. Chair, for your rant. Just to follow up on your rant, I think that some of the service levels that we're seeing to DRPS itself, for example, and through transit, have to do with some of the problems that we're seeing with the growth and other issues that we're seeing that we haven't necessarily had in the past. I'm not anti-immigration in any way, but we definitely have a large amount of growth happening in the region. And as I've said before, it's not due to growth from Canadian population, it's due to growth through immigration. And we certainly need our partners to come to the table when it comes to looking to providing homes for this necessary growth. Certainly part of homelessness that we're seeing is an erosion of the number of homes that we have for people who are already in the communities. So anyway, thank you. Just a question I do have is we talked about departments and divisions, et cetera. Has I think the transit is in-house for us, but the police services board is separate from our budgeting process. Are they going through the same process and rigor that we are in terms of our internal budgets?
Through the chair, I think I would have to defer that question to Councillor Wu, or perhaps Chair Henry may know that. I mean, we've certainly made clear what committee and council has requested. We don't, as a staff, we don't have any authority to force their hand. So, and I don't mean that in a negative way.
Yeah, I think, to be fair, at the last regional council, we got an update from the chief who had informed us that his board or budget committee had met the previous week, and there hadn't been any change in the request. just for clarity, they've sent in their request. The request from staff went back to the police board for a 2.5% overall increase to the regional budget. Their request is currently 2.93, if that's correct, 2.93% to the overall budget. And the recommendation from our committee was to get it from 2.5 to 2%. So that's where it stands.
Okay, thank you, Chair.
Councillor Wu, do you want to speak on that?
Excuse me. Yes, you're quite right. You might have heard, in fact, I think everybody attended the regional council meeting and heard the presentation from the chief. And again, I guess at the, first blush, when everybody's talking about the 9.75 and everybody's saying to me, how could you bring us a 10% increase? And like I said, it was a first blush. And that was in regards to what was presented to Finance and Admin the last time we met. As the chair had rightly mentioned, that the Police Services Board had presented a budget, and I was 2.93, and and through the Direct Commissioner of Finance and the report that came to us was 2.5, and the blush, I guess, or I shouldn't say the blush, but the request was to go back and look at a 2%. I think you might find that the board will come back, look at 2%, which they are doing. But again, that isn't, let's just say, if we are going to look at, and Councillor McDougall mentioned, as we're looking at the growth and within our community, to keep pace with that, and I hate to mention, and I'm sorry, and I mentioned to the chair, what we saw happen in Pickering yesterday, and I did mention at the Police Services Board, what we're seeing happening, unfortunately, is a carryover. There's no borders. There's no borders for crime. It's not all contained in the city of Toronto. I use the term, Ajax and Pickering are becoming the Scarborough East, and that is creeping out our way. And again, for those within the force, and again, if I can say, a lot of that has to do with the new hiring, but again, there is a period, and Chair of the Police Services Board, Mayor Collier, there was a flat line, and I think you'll recognize that too, Mayor Rash. For the longest time, we did not hire. We're just catching up, and we're still behind. So I think you'll find that the board will come back, still asking for the 2.93, and we'll see where we settle on that.
Great, thank you.
Okay, thank you.
Our date of our next meeting is the Tuesday, November 14th. I think we might have to set aside more than a couple hours for that meeting, so. Schedule accordingly, because we're going to have some discussions that may take some time. So, Chair Henry, do you want the last kick at the can or not? No? You always get interested when someone talks about police hiring freezes, that's all.
So I have great respect for the work that our police officers do, but Durham Region was very lucky for a very short window, and during the time that we didn't hire anybody was a time when OPG decided to take over the contract for their own security. And the region, through great negotiations of Regional Chair Anderson, had negotiated with OPG that they would pay the salaries of all of the police officers that returned back to Durham Region until they could be worked back into our routine. While OPG hired some of our officers to stay in their corporate security, at one time, we were operating with a substantial number of officers greater than we had, but they were paid for out of the agreement that Chair Anderson had put together. So we were operating above an 871 number, and then speed things up. Things did get chaotic because we then, through retirements, we got below that 871 and we were playing catch up. And during that time, should have we thought differently and done things differently? Could have, should have, and would. But this council, during the last 4 years, and then during this term of council, have hired about 70 additional officers since in the last 5 years. I know that with the growth in the region, we will continue to hire people, but that story has never really been told. The other part is people will tell you that the region of Durham lost that contract, and that is not true. The contract with OPG was taken over by OPG because they wanted their own security force. And a number of our really good officers at that time that were doing work with OPG went to work for OPG, and some came back. But we had a problem where we have a big gap in seniority within this organization because we didn't hire. So hopefully going forward, we will continue to do what we're doing as our region grows and our forecasted growths are there. Growth is expensive, and there's challenges, as we're all aware, with Bill 23 as it relates to growth. So thank you for allowing me to put a little clarification on that. It's a sore spot with me, as you know.
Rant number 2. Okay, thank you.
Rant number 2. On a side note too, Chair, we haven't worked it out, but we may, the CAO and I have been discussing, because of complexities of trying to bring that back, we may do it through a special council meeting.
Okay, that's fine. Councillor Crawford.
My question is the regional budget meeting still happening on Thursday, is it? Was there a public meeting?
Oh.
If I may, through the chair, there was going to be an open house on October 12th because of the dialogue and debate that has occurred and where we're at. We had pulled back our promotion of that. So we do not have a town hall for October 12th. We are looking at having one in January, mostly because if council approves a guideline in November and then this committee has water sewer in December, we'd be looking at perhaps a town hall early January.
So I have a free night.
Yes, you
Thank
do.
you.
Congratulations. Motion to adjourn. That was my next item. Moved by Councillor Lee, second by Councillor Wu, that we adjourn. All those in favor, opposed? Thank you. Thank you, everybody.